Alrighty. Looks like we are good to go. Welcome everybody to Hurley Investments. I keep wanting to say trade findings and adjustments because that's usually my deal, but we are tonight at the Market View Commentary, November 29th, and it's good to be with you this Monday. Kevin had me on. He was thought to be busy driving back and getting back to the swing of things for tonight, so I am taking over tonight. So that is what I'll do. I've got a few things up here already, but obviously you're probably seeing this is exactly what we had last week. So I'm just going to edit some things. We want the 12th, excuse me, December the 5th, I believe. Last trading day is the 3rd, so I'm going to go with 3rd. Great. So, got the link for the Y charts in there. You're welcome to go look at that. I'll kind of leave that one up to you for this week. And we'll talk about that in a little while. The rest of this stuff we usually go over. So, what do I want to talk about tonight? Is just this big, ugly red candlestick right here. Boy, is that an ugly one. Market finished down last Friday, Black Friday. And that's kind of what I want to talk about a little bit. It was down 2% one day. I think it was 2.3%. And that day was a half day, being the day after the Thanksgiving holiday. The market was closed. And I'll be honest, I was getting pretty excited Thanksgiving Day, seeing the futures up really big. Everything was looking good. Everyone is super excited for the Christmas rally, the Black Friday retail boost, etc., etc. And it just took a turn for the worst overnight and went down ridiculous. Bit of a crash and obviously a nice bounce back today. But there was some difficult conversations between Kevin and I on Friday of what to do, what not to do, and working through our process on dealing with the market on a day that just was total crap. So, for a moment, why don't we put you guys in our seat? What was the thing to do? And obviously this doesn't work. There, that's a little better. We don't know there's a bounce back today, right? And maybe it will help for me to say that we don't know really what will happen tomorrow and the continued issues that we'll have because of this. I keep saying it wrong, but the what is it? The Omnicore? Hold on, let me find it so I don't sound stupid. Scrolling through my phone, remember the name of this Omicron variant. So let me see. I assume you guys are hearing me because I didn't get any confirmation. So hopefully you guys are hearing me. The reason we had that sell-off it was running through this news overnight of an Omicron. Well, they didn't really know what to call it Thursday night, but what we know as the now as Omicron COVID variant running through South Africa quite quickly. And the fear of more shutdowns that this might cause, as it looks on paper to be more contagious than the Delta variant, and we just don't know enough about it, right? So the fear of more shutdowns or getting shut back down of economies. Would someone please just give me a thumbs up that you guys are hearing me? I assume someone would have said something by now, but just want to make sure. Great, perfect, thanks guys. Good, good, good. I think that kind of wraps the situation up that we're in for Friday. We're putting ourselves in this Friday situation, seeing the market react quite extremely to this news. So what is your initial thought? Market opens way up here, 46.65, and just keeps going throughout the day. Comes back a little bit, but really pretty much finishes at the lows of the day. Bill says, one day does not a trend make. If you don't know what to do, do nothing and wait. Geez, Bill. I might as well just kind of quote that, and we're pretty much done for the night. You stole everything I was ever going to say. Seriously, though, great comment. No problem, Bill. That was just what I was looking for. So, um, yes. So here's kind of how our conversation went. Middle of the day, market's down big. We only have the half of the day. Um, Kevin starts to talk about, well, what happened when we had COVID shutdowns from the beginning, and how did that affect things? I came back with the idea, well, this is a variant. We're not in the same situation as we were when we first originally heard of coronavirus back on, January, February of 2020. So we kind of went back and forth like that, tried to look at charts on what happened during Delta. That was a little bit difficult as, when exactly did that news hit? Um, that was kind of tricky, but um, as we kept going back and forth, we talked about, well, okay, the banks are down big. I don't like how Bank of America looks today. Let me title this. So we looked at Bank of America. The thought was, if banks are going to go through something like this again, the banks did okay through the first wave, um, through really Delta and everything else. They've done great afterwards, as we know that rates have to continue to go up. So why would it be down? And Kevin kind of came back and said, well, it went down even so because of the uncertainty, even though they came back out all right. So we kind of went back and forth like this, and the decision was, you know what? Let's look at Bank of America. Oh my goodness. No thanks. Bank of America. Oh man, I'm struggling. I don't want this blue thing. Tell it to stop. Bank of America came down, hit this 50-day, fell below it, and came right back up and finished the day positive. Positive for the since the open, not since the last close, obviously. Down quite a lot. Held that 50-day. And we thought, you know what? Bank of America is holding a technical pivot, not a pivot point, but a technical support. We know that Kevin also had mentioned that we know at this point the Fed is going to have a hard time doing anything else except raising rates, regardless of if there's shutdowns and whatnot. It's kind of having to do what it has to do, and they're going to have to raise rates next year, whether they like it or not. And that was another big decision, another big point, rather. Which should be good for Bank of America. we'll come back to kind of the big picture and some of your comments. We looked at Boeing and thought, you know what? Part of the news here is travel is being restricted. Let me add that point. South Africa and surrounding countries, the travel ban was imposed. I guess that means Biden is a xenophobe, right? One would only assume. So we looked at Boeing. You know what? Boeing was holding a pivot point. However, if travel is going to be restricted, it might make more sense to have something on a Boeing. So we added a bear put for shares. Let's see if I can look that up. Here it is, down here. Let's call, here it is. We had a bear put. Because these darn things are so expensive, $10, we can make money up from 195 all the way down to 175, and we're going to be okay. 175, kind of the closest point of support over the last, year. So that if it continues to go up from a day like today, even though yes, it was down today, so this was even better, a good decision to get some protection on there. But it had to do with the fact that if travel's restricted, maybe that'll affect planes being purchased. We just didn't know. But I'm glad we got something on for that. Disney we had protected. Apple didn't look great. Let's look at Apple. Heck of a rebound today. The thought on Apple was, well, close to that pivot point. They did really well last time around. Oops, sorry about that. One of the big tech companies did fine through COVID initial reaction, of course, and they came back up pretty quick. We're in the holiday season, more sales. I think we don't really know enough right now. We'll leave Apple alone. That was a tough decision, if I'm being honest. What was another one? Costco was up that day. Thank you, Costco. At least it was up most of the day. I guess it finished closer to the finished negative, but loved having Costco on there. Disney was already protected. We were good to go there. We just needed to roll protection down because it was expiring that day, which kind of stank because that got expensive on a big volatility day. Ford was holding up all right. Facebook came below that 50-day, but again, another tech company, just wasn't enough to really show us what we could do. But what we should do, let's see, Under Armour was another one that looked awful. I'm all the way down 2350-ish, and slowly came up throughout the day. So that told us, okay, you know what? We're okay leaving Under Armour alone. Where we should get a boost of Black Friday sales, etc. Retail stock did amazing. They should do okay. Again, didn't know enough. And then there was Visa, which we're just in calls with, but it opened down big and came all the way back up. And it's just in its bearish trend, and we're happy waiting to see where it bottoms out to dollar cost average our Visa leaps. So, big picture, Bill, if I could pretty much just steal what you said, if you don't know what to do, you just got to do nothing. And really, that's where it kind of boiled down to. We don't know if this is going to be worse than Delta. It kind of sounds like it's supposed to be, but we don't know yet for sure. So I'll say it like this: when you don't know what's happening, you don't have to force something to happen. Super glad we didn't get protection on Apple or Bank of America or some of these other positions. Super glad we had protection on Disney, as Disney just continued to not do great. Even though it came up from the open, it was down significantly. And we're just waiting for it to find that base. Kind of starting to do something there. Down big this morning and came back up. So we just kind of want to wait and see what is going to happen. In a similar situation of this big picture of waiting to see what happened over this weekend. Let me read some of your other comments. I like that Abraham says you need to assess if there is a base for a real drop. If not, get a coffee, otherwise shut the shop. Well, I don't drink coffee, Abraham, but yes. Another great comment. Ida would like me to comment on the VIX as a market barometer. So let me get back to that in a second, Ida. Let me kind of wrap up this idea. So I kind of laid out a little bit of what happened, right? You know, there's the shock of seeing things open so much lower. You know, we get on the phone together, Kevin and I. We just kind of talk about it. We joke about it a little bit and voice our frustrations, kind of get that out of the way, and then we kind of get down to business. What we do is one step at a time. just take it one step at a time. You can kind of see that with, obviously we're going through each stock position, but what we knew at the time is very little. Take what you know. Let me start a new thing here. Take what you know and be honest about what you don't know. I'm going to make this our what did we do. And what should we do? What did we do? Take what you know and be honest about what you don't know. After going kind of back and forth about this and that, and trying to get a grasp on what would happen later, the honesty is that we just don't know. We didn't know if this would be a bigger deal and there would be more shutdowns come today, Monday, or if it would just be kind of a shock and a bounce back Monday. What we also knew, as some of you have mentioned, and as we talked about last Monday, our situation is we know that whole trading week, as Kevin went over last Monday, that whole trading week of Thanksgiving is kind of can be kind of low volume and volatile. We knew Friday, of course, that includes Friday, but also this reaction was heavily retail trader driven. So somewhat of a huge reaction emotionally. Why on earth should Bank of America and banks be down? Why would some of these retail stocks be down that did good during COVID? Things like that told us that there was a high degree of irrational selling. Oh, no, we didn't know. What was going to be shut back down, if anything. And even though we had the president come out today and explain that he's not going to have anything shut back down, he basically said as long as we get people vaccinated. So to a large degree, we really don't know exactly what is going to happen, what, if anything, may be shut down, and how the Omicron, who made up this name? We don't know how the Omicron variant is going to play out. It's likely there's going to be news days where it's going to shake the market and scare, continue to do that down the road. But right now, we just don't know. So, as we went back and forth, we kept kind of trying to play the devil's advocate with each other and and just kind of came to this point where, you know what, we just don't know, and that means we don't do anything. Besides what we did with Boeing, there really wasn't a clear direction and what to do, and too much irrational, emotional selling. So, questions about that and our thought process? Any questions or other thoughts are welcome. And I'm gonna make another note here. I'm gonna quote, and this is in my head because my 2-year-old little girl watches that stupid Frozen every day, of course. And that Frozen 2, the theme there is you take the next right step. As silly as that is, it's very true, and I really like that. Rather than getting on the computer and first thing in the morning, oh crap, we got to throw on protection on everything. Everything's going down. We really got to get protection on. It was, okay, well, let's stop and think about this. Let's think rationally, because this is irrational to a large degree. We don't know everything. We don't know how this is going to play out, if there's going to be shutdowns. So let's take things one step at a time. Let's look at each of our positions and look at what we might need to do, if anything. And that's what we did. Take the next right step. All right. Moving on, I did want to show, I really liked this video of, this guy is Jim Lebenthal. He's the value investor type, similar to what we do. And he talked a little bit about Disney, which this is an little bit older video, but it's worth playing a little bit. Let's see if we can get my volume up here where you can hear it. We'll probably get a commercial here to start with. Are you guys hearing this? I don't think you are. Let me see if I can. See if I can pick it up with my audio. Let's see. All right, let's try that.
Own Disney here. You could buy it, and that was some 7% ago. So you got to own it.
Yep, I do. And I still think, just to use the phrase, you should own it still. And if you bought it yesterday, I'm sorry that it's down 7%. But I very strongly believe that over the years to come, this is going to be a better returner than the S&P 500 overall. So please don't be thrown from this horse by one day. What happened is they missed on the subscriber counts. And why that happened is because of Hotstar, the people who removed their Hotstar subscriptions. Hotstar is mainly their Indian subscription source. It's a low ARPU business. It's not where you're looking for the growth either in numbers or in revenue. So this doesn't really throw me from the belief that at 118 million subscribers, they will get to their 220, 240 million subscribers in 3 years. They're still projecting break even at that point on Disney Plus. And that's incredible given that they're going to ramp up their spending on content. That tells me that they're projecting better numbers ahead than they were just a year ago. And, you know, I think also with Disney, what you've got to remember is there is the theme park business, there is the studio business, both of which are coming back post-COVID. I know today's a lousy day. Some days the market punches me in the mouth. Today is one of those days, but by no means am I staying down on the mat with Disney. I'm back up. I'm in it. You should be in it too.
The question is, Jim, are there longer term issues that Disney needs to wrestle with as it relates to subscribers and whether they've reached some sort of saturation point, and that the franchises, the great ones, of course, that they have, will only take them so far? And not only do they need to spend, as you say, but they need to spend a heck of a lot more money. Bernstein today is talking about that. Moffett-Nathanson says the company will now invest more on programming than their most recent estimate of $8 to $9 billion. That clearly is the focal point. Price target cuts today from J.P. Morgan, Goldman Sachs, UBS, Bank of America. Barclays does a victory lap as they downgraded the stock not all that long ago going into the number. So, Jim, how do you deal with those bigger picture issues, right? You blame it on one thing, but those are some serious issues that investors are going to have to grapple with. A, saturation, and B, a much bigger spend than maybe we were anticipating.
Yeah, it's a great question, Scott. You know, as you were asking that question behind you, they put up the march to 118 million subscribers from 10 million 2 years ago. And that just right there is a little breathtaking, 108 million over 2 years. Yeah, the growth rate is going to slow down because we're no longer in the pandemic. And yes, they are going to spend more. But however, I think that the spending that you will see a very good return on investment from, that is the thesis for long holders like myself. You know, time will tell, but basically what I'm saying to you, Scott, and answering that question, and to everybody who owns it and bought it, is the results last night were just one quarter, and it's a blip in the overall trend that the chart behind you when you were asking the question clearly shows is moving in the right direction. I think it will continue to do so. And just to summarize, that spending, that's good spending. That's spending that's going to have a good return on investment.
So that's cool. Let me get my headphones connected back on. My name is Almighty Ruler, just so you guys know. Let's see, Disney. All right, so I really liked that. I liked how he said Disney's growth is going to outpace the general market. Definitely agree with that. I think this sell-off on Disney is way, way overdone, and that just typically happens when the market doesn't get exactly what they want all the time. But my goodness, Siri, shut up. Apparently Siri just thought I was trying to talk to her. Lost my train of thought. What a amazing place to buy Disney is what I was going to say. Definitely have those parks opening up. Man, I see everybody going to both parks in the US. All of that's looking good to me. They need their cruise lines up at some point, but the fact that their trend of growth in subscribers is continuing in the right direction on a longer time scale than just this one quarter, you know, that fills me with a lot of confidence, and I'm glad we're in Disney, and I'm glad that we're making so much up on the downside, and what an opportunity there is. Questions about that? Really not much to say. I really just liked what he had to say, and let me see. Weird. Let me see if I can get that, copy that link for you guys. That way you can have it. All right, so where is our markets going to end this week? I think that's kind of a tough one. We have a good bounce today. I think they're going to end up higher. Just because of where they were from last Friday, and futures are looking good right now. So I think we can chalk this up this week as somewhat of a blip, and we're definitely going to see some issues the more we find out about this Omicron variant that could definitely continue to affect things. So I guess I'm tentatively going with bullish. I think we could easily get back up to 47, but I think that's 47.15, closer to 1% from here. Earnings. Get our economic calendar here. This week, can't imagine there's anything really we need to worry about too much for earnings. Carnival, that will be one to keep an eye on. Let's see. CRM, CCL, KR. Kroger. Let's see. Kroger's on Thursday. Get rid of these guys. Marvel, not the Disney Marvel. They're another chip stock. We've had that at some point. Yeah, that's all I'm looking interested in looking at. Salesforce was Tuesday. CCL was Thursday. And let's see, CRM, where did that go? Thanks for bearing with me, guys. Salesforce, where are you? I'm sure you guys are yelling at me. It's right there. We're on Tuesday. Great. That's really all I'm interested in looking at this week, but really not much to worry about. Our main earnings are over. Economic this week. Pending home sales was today. Those came in higher. Housing price index. Big one more of consumer confidence tomorrow. Wednesday, manufacturing. Construction. Definitely want to see that continue to go up. Oil, let's see, Monday, Tuesday, Wednesday, Thursday the 2nd. I'll figure it out eventually. Got our employment. Continuing initial claims. Those ones are important. Let's see, Friday, more of the employment situation. Unemployment wage, average work week. All right. Any questions on economic stuff? That's an old description. How am I looking to trade? I'm going to say looking to see how news and stocks play out from the Omicron situation. Still have Costco, Micron, coming up. Costco, real quick. Let's take a look at some of our Costco. Man, has Costco been so cool. Much of our gain today was Costco. The darn thing is just so overpriced right now, but it just keeps going up. So my thought is earnings comes around, closer we get to earnings, it might be a good idea to be out and off of Costco by sometime next week. 12.9. That's one where when you just don't think it can continue to go up, it just keeps going up and you just leave it alone. Just leave it alone until it tells you that it's finished. Till you get a nice big down day and you're just ready to get rid of it. Or we have an earnings coming up. Maybe we take some profits off the table, roll some, what do we have here? 550 calls up to 660, maybe 600, 660, and see if it continues to have some follow through. If not, you still have all of that profit and you can deal with a 600 or 660 leap call that you can dollar cost average as needed. But with the situation Costco is in, I wouldn't think that any potential profit taking in Costco is going to come because of their bad earnings. I would think it would come just because it's run so far and for so long that it's an excuse to take some profits. And really, that's it. Keeping an eye on those. Micron held up well Fridays, doing okay. Have some people in Micron leaps calls. Those are looking pretty good. And really, that's all I had for you guys today. Oh, I did have this link down here for that video as well. So now I have it in two places. What do you know? Guys, and gals, any other thoughts or questions you guys might have that I can go over for you? Ida, I know you had your question about VIX. VIX, I don't know that I would think of it as a market barometer. That kind of makes it sound like they're taking a pulse like consumer confidence, like they're taking surveys and getting an idea for how consumers are going to spend and whether they feel like they can spend more, et cetera, et cetera. And VIX is really not like that. It's just the simple measure of whether the stock market is going to go up or down, the likelihood of it going up or down over the next 30 days. And that's really it. It's fairly simple. When there's a fear news headline event that causes some fear and irrational selling, obviously that likelihood is going to go up. I wouldn't look at it as necessarily a trend or look at it like you would a economic indicator, like a consumer confidence type thing. It just comes in these spikes and pairs off, spikes and pairs off. The only thing really I look at the VIX for is, are protection going to be expensive today or not? Can I get a short call on to cover a covered call on for shares on a high volatility day that it might pair off and look awesome today on today meaning today, and short call, covered call on a Friday where it could come back down and have some volatility, take advantage of some volatility crush. that's really all, the only couple things I'm worried about with the VIX. Does that answer your question, Ida? Any other questions that I can help you guys with? Kind of a long session. Thanks for bearing with me as I type things out and struggle to do two things at once. Question coming in. Perfect. Thanks, Ida. All right, guys. Not seeing anything come through. I really appreciate you joining me. Thanks for your thoughts. And Kevin should be taking the Thursday commentary. I can't remember if I said it was going to be canceled or not, but it is going to go. We are going to have a Thursday commentary. It will just be Kevin again taking over that one. So see you on Thursday. And thanks, Abraham. Thanks, everyone. We'll see you Thursday with Kevin and talk to you then. Take care.